Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
And welcome. This is the Investor Coaching Show. Paul Winkler, talking money, investing, financial planning, retirement planning. You know, that phase in your life, you go from working for money to money working for you. That's the whole idea behind it. And just understanding a little bit how this stuff works can be helpful to creating some peace of mind, because we fear that which we don't understand, as I always like to say, here with Evan Barnard. So, Evan, you're going to go, man. Let's have some fun.
In the land of the blind, the one-eyed man is king. So let me give you some background on this. And I was
depth of field perception a little problematic, but anyway.
So I was, going through Facebook, and as you might guess, because of all the algorithms, I bet every third post is an investment ad, either to hire me, or an investment idea, or a something.
Oh, yeah.
Because it's feeding off of searches, and it's always investment stuff's always on my computer.
Yeah.
And conversations. And so I ran across this ad, and it said, somebody is putting in ChatGPT, what is a fiduciary and do I need one? Mm-hmm. And this was basically an ad to get advisors to use their marketing chassis or whatever. It was aimed at an advisor,
right? To try to get you
to pay them
to get leads.
Get leads.
Yeah, sure.
So the ad, which is it's just like the investment industry. The ad makes it sound like, well, if you type that into ChatGPT, you're going to get call Paul Winkler Inc. Or whatever the deal. And so I thought, well, I'm just going to type that question in and see what happens.
Did you?
And so, first, so I just said, what is a fiduciary and do I need one? Because we hear about that on, all the ads, right. 99.7, everybody's talking about it. So a fiduciary is a person, and this is according to ChatGPT, but unedited.
All right.
A fiduciary is a person or organization that is legally and ethically obligated to act, all cap or boldface, solely in your best interest when giving advice or managing your money. Think of it as the highest standard of care in financial, legal, or professional relationships. Fair enough.
That's what that's ideally.
Well, that's so we go. So it says, answers the question, what is a fiduciary?
Yeah.
Number one, they must put your interests first. They must avoid conflicts of interest. If one exists, they must disclose it clearly.
Oh, yeah.
Right? If it exists, well, yeah.
Yeah, disclose it disclose it where
you either say, well,
or you don't read
I'm now taking off this hat as a fiduciary, right?
I didn't see that. Well, it was in the fine print.
Right.
Well,
yeah.
And
so, but as I'm going through this is what someone is expecting a fiduciary to be, and that's just not the reality a lot of times as we go further and further down the list. They're supposed to act with prudence. Their advice must be based on thorough analysis and professional standards, not personal gain. Fair enough, but sitting right here in this, you're grabbing it.
You're grabbing. You grab it, buddy. Hey, I got it flagged. I got it flagged right there. If you go right there, see the flags on it.
You know where the pages are.
I can show you exactly where it is. I know exactly where you're going, man.
But when we said act with prudence, the standard restatement of trust third, defines. I don't know if it says defines prudence, but it says what prudence is.
Well, yeah. In essence, what it says it's a restatement as a guide for practitioners, the law trustees, and the investment advisors, as well as a source of legal authority. It should be recognized that trust law is most often applied in daily trust practice as distinct from litigation concerning trust administration. So it's spelling out, hey, how do we define prudence? Right. If somebody has to be prudent, how do we define that? Because that's probably an important thing for practitioners to know what is prudent and what's not prudent in managing a portfolio. And of course, it talks about risk and a duty to diversify is one of the things that it talks about in here, right? And, don't put all your eggs in one basket. It defines it based on putting things together that don't move in concert with each other. I mean, where have you heard that before? But go ahead. I think I know where you're going. Do you want to talk about the market efficiency thing?
Well, it says, you've got to justify doing anything besides fully diversifying in an academic manner. And if you're going to pick stocks, if you're going to do something besides standard prudence, you have to have a very good reason for doing so.
And how do you define what that good reason is?
Yeah.
Because,
conflict of interest.
Well, technically what it says conflict of interest. But reality, you can do this, you can go against this, and there's no conflict of interest doing it, which is this. Economic evidence shows that from a typical investment perspective, the major capital markets of this country are highly efficient in the sense that available information is rapidly digested and reflected in market prices. So news comes out, stocks move. If the news is good, they go up. If the news was worse than expected, they go down. If the news is neutral, then nothing. If we look at bonds, they will actually take new information and it will be reflected in bond prices in seconds. So here it says, as a result, fiduciaries, Evan's word, and other investors are confronted with potent evidence that the application of expertise, investigation, and diligence in efforts to beat the market in these publicly traded securities ordinarily, and there's where they can get around it, ordinarily promises little or no payoff, or even a negative payoff after taking into account research and transaction costs. Empirical research supporting the theory of efficient markets reveals, well, wait a minute, some people are able to do it. Maybe that's what I'll use as my criteria, right?
Yeah.
Oh, did somebody beat the market?
They did it for 3 years.
They did it for, they did it in the past. But here's what they say. Reveals that in such markets, skilled professionals have rarely been able to identify underpriced securities, outguess the market with respect to future return with any regularity. In fact, evidence shows that there's little correlation between a fund manager's earliest successes and their ability to produce above-market returns in subsequent periods. So you can hire somebody that did well in the past, but the problem is they're basically saying their chances of outdoing it in the future are not great.
Right. And so if you're on this quest to find a fiduciary, one of the things you have to realize is prudence is not the same thing as a really good story about why something is going to be going up. It's just a story is not academic research. The third thing it says is provide full.
One of the biggest investment management firms in the entire country advertises all the time that they act in your best interest. They align your interests with theirs, and they engage in the opposite of what I just read.
Yeah, they don't. I don't know if I can say they only do stock picking. I think they do.
Yeah, I don't know.
I don't think they even use funds, period.
They do have, there is a fund that is managed by the CEO of the company. And I'm going to tell you that the returns versus benchmark are not great.
Yeah.
Yeah, I'll have to show it to you.
It's hard to do, even though it's a great idea.
Yeah.
Number 3, provide full transparency. Fees, compensation, and relevant facts must be explained in plain language. And so, as I was going through this, I'm thinking about why I like our process and how we, are very upfront about all of that stuff. And if you're not relying on smoke and mirrors and a good story, facts don't hurt your argument whatsoever. They're just facts. But that needs to be explained in plain language. Be accountable. You have legal recourse if a fiduciary violates their duty. This is not true for all financial professionals. And so we hear this phrase, acting in your best interest. But if someone was let's just say they were a broker and they're not even holding themselves out necessarily as a fiduciary. They work for a brokerage firm. And they could say they act in your best interest, but the legal relationship is that broker works for the brokerage company. They don't work for you. When you have this fiduciary relationship, certainly as a registered investment advisor, that's got teeth from the SEC and the Investment Advisors Act and all, 1940 or whatever. And that's an actionable thing if we violate that fiduciary duty. That isn't the case for everybody that says they're a fiduciary. You can't necessarily hold them accountable.
And I think the issue that you deal with there, Evan, is just people actually advertising as that and then taking the hat off.
Right.
And not acting in that capacity. And as you said earlier, having it in the fine print. Or as I guess I said it.
Well, and again, in the agency relationship, from the law side, we'll take annuities for as an example. We talk about those a lot. It would be the same case legally of just regular life insurance or something. But an annuity, when that product is sold, unless it's a fee-only annuity, if you're an RIA advisor, that's an agency product. And again, the minute that's done, the agent is acting on the behalf of the insurance company. They are not acting on the behalf of their client just because they're selling it. And so, again, these relationships matter when things go sideways. It's kind of like settling an estate. If everybody gets along, it's a pretty easy process.
Oh, how true.
If somebody wants the rocking chair, everything goes bad in a hurry. And so then so those were some of the basic guidelines of which we, check off all of them, which was fun. But then it said, do you need a fiduciary? Great question. Well, if you want professional financial planning or investment management, that would be you would want a fiduciary if they're going to be managing assets. You want impartial, conflict-free advice. You lack time or expertise to evaluate financial decisions on your own. And, if it says a fiduciary can help you avoid major mistakes. And so I want to touch on that one again, because a lot of times, and you may run into the same thing when I have conversation with clients, we never have this conversation of, it's an intelligence thing of, well, you don't have what it takes to build your portfolio. That's never the conversation. But I think that a lot of times clients feel that way. And, the issue is you're very good at doing what you do.
Right. It's ignorance.
And if you were this interested in investing,
stupidity. Ignorance isn't stupidity.
You would be doing my job instead of, replacing hearts.
Right.
In the hospital.
I could probably do what you do for a living too if I wanted to spend my time, doing that.
Study that. Exactly.
If I wanted to be an auto mechanic, let's say, just give an example.
But here was the thing I do want to touch on, and you mentioned it last segment when we were talking about Roth conversions, where you might want to hire a fiduciary is you're facing a major life transition. And they gave examples of marriage, buying a home, inheritance, military career milestones, or anybody retiring or something like that, starting a family. All of a sudden, most of us, I'm going to mix my metaphors here a second. And I was watching an interview a monologue by Bill Maher. And he was saying most people don't choose their political affiliation. That's just how they grow up,
Yeah.
And I think the same thing relates to investing is, early on, most people don't just choose their investment philosophy. It's what their parents did or, whatever, where they got information. And so if you've developed a habit as a single individual and now you have this transition, that's a whole different set of taxes that may come into place. Now there's, you might now have an insurance need because you're getting married and I didn't need insurance before. And so a lot of things are changing, but if you're busy living your life, you're not aware of those changes or an inheritance, all kinds of things.
Well, you have status quo bias. The idea behind status quo bias in the psychology literature basically says that we tend to just kind of keep doing what we've done before. Because it's what we've done, what we've always done. And, so it's hard to overcome that. But if you have a major life change, that can help overcome that. It kind of shakes the boulders a little bit and causes you to not continue doing what you're doing before.
Right. Yeah.
So it makes sense.
So, if you're going through some big change, that's pretty helpful. And so then it went on to, just kind of go through questions to ask and so forth. And so just because you can ask a computer a question and it gives you an answer, and in large part, most of those answers I think were pretty spot on.
Yeah.
But if you don't know how to read between the lines or the question after the question, what is prudence? What is, all this kind of stuff? Is that diversification? All of a sudden, the computer is making it even harder, I think, to make the choice. And so it's not always this great thing. And what creates a problem, I'll close with this before we get to a break. But this was from ChatGPT, unedited. Just I wasn't massaging it. I wanted to kind of see what it said. Well, a news story broke. I don't know if it was Friday or if it was earlier this week, like Monday or Tuesday. But in the Pakistani newspaper, The Dawn, which is an English paper in Pakistan. Okay. So here's the headline.
Okay.
Embarrassment. Pakistani newspaper publishes ChatGPT prompt in business report and sparks criticism. So there's an article in the Pakistani paper, and the article itself was on, I think, like auto sales rev up in October. It would be like kind of like their version of the Wall Street Journal. Okay. And so you have this nice article in their quote unquote Wall Street Journal. And then at the bottom of the article, if you want, I can also create an even snappier front page style version with punchy one-line stats and a bold infographic ready layout.
I know exactly what you're talking about.
Perfect for maximum reader impact. Do you want me to do that next?
Oh, ouch.
So that made
embarrassing
it into the paper. I bring that up because the answers are only as good as, the questions. And if you get some response that was from a computer, you really need to go into a little bit more thought behind hiring an investment person than just ChatGPT.
Well, I got to tell a quick story. So I did this week. I'm working on this book, writing this book, and I wanted to know what percentage of investment advisors, registered investment advisors, which is somebody that would consider themselves a fiduciary, engaged in tactical asset allocation.
Okay.
So I said, what percentage of advisors do that? And AI comes back with, and I forgot how I worded it, but it said, well, very few do. It was like 10 to 20%.
Wow.
No joke. And it's a 10 to 20%. And I said, wait a minute. So I decided to have an argument with AI. And I said, I can't remember the last time, and I read a lot of ADVs.
Yeah.
Which is the disclosure by investment advisors. I can't remember the last time that I read an ADV, save that of ours, that didn't have that they did that in there.
Yeah.
And you look at mutual fund companies, for example, you'll see, the average turnover ratio. If you have turnover, a lot of buying and selling inside of a fund, that by definition is they're engaging in stock picking. And if you have what is called style drift, so they drift between large value, small value, large, medium, mid-cap stocks. They drift around. When I did the research on it, it was something like 70%, as I recall, 75% of funds on a year-by-year basis. It was over like a 5-year basis or something like that. They had drifted in style. It was huge. So that is tactical asset allocation right there. So I said, I can't remember the last time I didn't see this in an ADV. And it says, well, sometimes they do that so that they allow themselves the ability to do that if they feel the need to do that. And I'm paraphrasing. And I said, so basically what you're selling me here, AI, is that they do engage in this behavior. And they do actually engage in tactical asset allocation. The answer was, well, yeah, I guess so. And I said, you can't make this garbage up. You cannot make this garbage up, that they actually engage in this stuff. But AI, it is funny. It is really, like you said, Evan, it is how do you ask the question?
Yes.
I mean, there's a guy out there that does this all the time, and he will put parameters around how he asks these questions for AI. And he gets completely different answers based on whether you've got to have science, repeatable, observable, logic-based.
Mm-hmm.
It's got to meet those criteria. And when he doesn't do that, he'll get a totally different answer than if he does ask it that particular way. So I'm telling you, you got to be super, super careful with AI. You'll never know what on earth you're going to get.
It's like Inspector Clouseau.
Yeah.
Says, "Does your dog bite?" No. He said, "That is not my dog."
That's not my dog. Oh, man, you're dating yourself now. Paul Winkler, Investor Coaching Show. Evan Barner, we're going to take a quick break. We'll be right back after this. Hey, just a note to you podcast folks, we just came out with a retirement income guide, and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement, real estate, life insurance as a retirement investment, and annuities, and interest-bearing accounts, and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. Hey, what's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax.
Munsters or Addams Family? I can't remember which one it was.
Yeah,
it's Munsters.
I guess it's just like that. Yeah, that was a fun one to record. You know what I started watching? I was out writing, and I just need to have like a break, from writing. And I never, me, I never watch TV, movies, nothing. I watched Frankenstein.
Oh, like with Bela Lugosi or whatever?
The new one. I didn't. Then I started watching the old one because I'd never even seen the old one.
Yeah.
But they had this new one out there, and I was just like, oh, this is kind of fun.
Interesting.
Yeah. It was. This guy had done a totally new take on it, and it was actually fun. I could see why people watch movies. Okay.
Yeah. I mean, I'm not your cultural phone a friend either on a game show for sure. What's the popular movie or song?
Yeah, I have no clue. Normally, that's the running joke around here is I don't know anything about. I don't ever watch movies. I don't ever watch that stuff. But I did. I actually got on and I watched a couple movies just to have a break from writing this week, and it was kind of fun. I don't know if that probably won't continue, but anyway,
that's right. Getting out of the habit of just totally nerding out.
Well, I brought that up simply because there was an article that I read this week, and it was talking about just totally doing nothing.
Oh, uh-huh.
And this person was just saying, hey, what about this idea of in retirement just totally checking out and not doing anything? And they were talking about how much they enjoyed that. They had spent their entire life working.
Yeah.
And then they were just doing absolutely nothing. And I thought, could I do that? Oh, man, that would be so hard for me.
I don't think I could.
I don't think I could either. I would get really bored because they were talking about that was the key to happiness, was this person said in the article. And I thought, happiness to me is when I'm helping somebody.
Accomplishing something. Yeah.
And I'm helping somebody. That's, and they were talking about depression. And, a lot of times with depression, you isolate. And they said that with isolation, in this particular case, you didn't. And I said, well, and I'm thinking, depression isolation is a whole different deal. A lot of times people isolate in depression. And a lot of times the reason they do that is because they don't think anybody wants to be around them.
Yeah.
They don't want to drag other people down. And they will actually isolate for that reason. And I have to try to convince them, no, you know what? Other people need you as much as you need them.
Yeah.
Force yourself out to get out there and do that. And there's this big debate as, what comes first, the chemicals or the depression? Is it the chicken or the egg? Did I become depressed because my chemicals were out of balance, or did I become, chemically imbalanced because I was depressed,
Right.
and there's still that debate out there. And I'm not going to solve it here, but, there's, but I think it's just so interesting that this person thought that happiness came from isolation and and the idea of contemplation. I've known some people that are able to become monks, and I actually talked to somebody that did that.
Oh,
Not too long ago. And they literally went out and completely isolated from the world, and then just rejoined society. But could I do that? I don't know, man.
Currently, I would give myself 3 days.
Yeah, maybe.
I don't think I could do 7 days of just isolation, detached, don't talk to Cindy, don't, just
Right.
sit there and stare at the trees.
Oh, gosh.
But, you kind of bring up a topic, and
Yeah.
I talk about this with clients every week is, you have your bucket of money and however many buckets it is and however big or small it is. That's one aspect of retirement.
Right.
But you have to have a plan for what you're going to do with 168 hours a week.
What are you going to retire to?
And so, I could maybe do nothing for like 3 days. And then I'd go stir crazy. And I would either have to go build something or, cut the grass every day or just go back to work.
Yeah. And we have, people that talk about that. They retire, and I think it was Jim's dad, did that, retired.
Yeah, it could be.
And then a few months later, he was like, I got to get back. I got to go back. I got to do something.
Yep.
I had a guy that was he was my Lyft driver.
Oh,
And he was Marines. And I said, Evan, I told him about you. I don't even know what to call you guys. I can't call you former Marines because once a Marine.
Former Marine's okay.
Is it all right?
Just not ex-Marine.
All right, just not ex-Marine. Okay, so former Marine's okay. All right, thanks. I needed that. So he and I got into this great conversation. It was funny because he dropped me off. And he says, that was the most fun conversation I've had in a long time. And we got into this really deep discussion about work, about finance, what he was going to do. He was actually going to go and he had this whole investment plan. And this guy is probably in his very early 30s, if he's in his early 30s.
Wow. Okay.
Yeah, he's very, very young. And compared to me. But anyway, but he was just talking about what he was going to do. And I says, wow, you got a game plan? He says, yeah, a lot of people in my age group, not necessarily the case. He was a little bit embarrassed about his age group, but he was talking about his game plan going forward and how he was going to create something in the future. And just talking about his time in the Marines and what he had learned and what he wants to do in the future. And it was just a really, really fun conversation about what he wanted his life to look like. But he actually had a really good plan, but he was talking about retiring at a very early age. And I said, well, do you think you can do that? And he goes, he says, don't get me wrong. He says, I am not going to do nothing. Right. I am going to take one of my hobbies and I'm going to take and turn it into something. It may not be terribly lucrative, but it will be and he says, I like working on vehicles, for example. It was one of his things. And he says, so I like the idea that I'm able to fix up an old car. And, if I feel like working that day, I work that day. If I don't feel like working that day, I don't work that day. And the idea being that he was going to actually spend his hours in meaningful activity for him. And he was going to get there, but he wasn't going to be sitting there doing nothing. Right. And that's where I think I would have a difference in, and I just couldn't do what this writer was talking about, just do nothing. Yeah. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.